Over the past few months, me and my best friend have been looking into crypto staking. Now, this is not something I am doing seriously just yet, but if I do, I will tell you. But it's actually possible to produce quite a high cash flow from crypto staking. You can think of this as a savings account, but held in crypto. Getting to 2,000 per month in cash flow is much easier than hitting a FIRE number. Why not do both at the same time? You'll find a ton of BS on this subject on YouTube, but here at Investor Thoughts, I keep it real and I cut to the punchline. I'll show you in this video how to get to 2,000 per month in dollars, British pounds, euros, whatever, doesn't matter. This is enough for most people to quit their jobs. And from this point, you can be more creative in wealth building. Now, I wouldn't only do this, I would continue to invest in the stock market. But this is a great alternative strategy to do at the same time, or a diversification strategy once you hit your FIRE number. 99% of crypto staking is extremely high risk. The coins that provide the highest APR, or their kind of yield on what is invested, are highly dilutive. So they may propose a 40% yield, but when you actually look after dilution, it's more like 5%. Which means the true return on invested capital is much, much lower. And frankly, if the base asset crashes, then you lose everything. Also, these are very complicated to set up. So how does this work exactly? Well, basically, you deposit into one of the many crypto staking providers, Crypto.com, Coinbase. There's many of them. There's a long list. I'll cover the best ones at the end of this video, so watch to the end. They allow you to stake in BTC, ETH, and a very long list of potential coins. You are then paid an annual interest rate. They actually pay this to you on a daily basis, which is cool. This is the safest and most simple way to do it. Using random unknown providers will mean you are taking the most risk. In this case, regulations protect you somewhat more. Now, it's worth noting these providers are not putting your capital into a bank or a brokerage account. So there is no full protection. But to be honest, there isn't any protection with the banks either. Let's be honest about it. Now, to remove the risk of permanent capital loss, you need to stake in the safest possible coins and use the most well-known providers. For example, if you stake 50% in BTC and 50% in ETH, so you've got your money split between the two, and then you split this between 3 or 4 of these different staking providers, and let's say this nets you a yield of, they pay you an interest rate of 10%. You only need 240,000 invested to get to 2,000 per month. Also, the immensely powerful thing about this strategy is that as the value of the currencies increase over time, so does your monthly cash flow, because the yield is on the value of the asset. So because the interest rate is relative, to the currency, let's say, for example, you have 240,000 invested, and this is paying around 2,000 per month in cash flow. But say next year, these currencies increase by 20 to 30% in value, which is not unreasonable to say. You're now making 2,500 per month, and you haven't done anything for that. That's just because the value of the currency has increased. So what if they double? What if they 3x? Well, so does your cash flow. Now, we have to assume that these high interest rates will not be paid forever. But frankly speaking, BTC will likely be a lot more valuable in 10 years than it is today. If we assume a 20% return on the base currency that you're holding in, say BTC, during that period, and we assume you cannot get a 10% yield in 10 years, but you can maybe get a 4% yield. This is more than half of what you currently get. I think that's very reasonable. That means your 2,000 per month in cash flow would end up being 5,000 per month in cash flow in 10 years. And you, again, haven't had to do anything for that. You have just collected that money every month for 10 years. I'm not sure there's a better deal out there than this. Now, how do these staking providers pay such a high yield? Is it too good to be true? Look, they all have different strategies, but in general, they are kind of doing what traditional banks do. They are lending out this capital to banks, trading firms, other institutions, much like traditional banks do today. They lend this capital out at a higher interest rate than they are paying you, and they collect the difference. This is typically to other firms that use the capital for short-term trading. As such, the interest rates are very high. Also, some other firms do both. they perform the trading themselves, and they pay you a higher yield, because then there is no one else to pay. They can make all the money themselves and pay you a little bit less. So what are the downsides? Well, the main issue is third-party risk. These staking providers are, they are holding a wallet with your cryptocurrency in it, which means they're holding the private keys, which means they're centralized, which means, they could be hacked and you could lose everything. Now, it's obviously not in their interest to do this. Whether it's BTC or ETH, whatever, they're holding it in a centralized way. So for whatever reason they go bankrupt, get hacked, you lose everything. The higher the interest rate, the higher the risk, and the higher chance of this happening. That's why it's probably better to get a lower yield and use a more well-known provider with a lot of customers already, with a decent track record. The other risk is the base currency. Now, you mitigate this completely if you just hold in the most stable and the safest coins. For example, BTC and ETH. They'll protect you the most. This is kind of like owning the S&P in the stock market, or the top tech companies in the stock market index. But there is still a greater than 0% chance that crypto goes down by 99% or goes to zero. It could get regulated out of existence. I honestly don't think that will happen. As a software engineer and an investor, I really don't think it will happen, but it is possible. That's not going to happen if you hold in dollars or you hold in the stock market. We know that's not going to happen. The other less important downside is lockup. Much like an old school savings account, many of these providers require you to leave the BTC and ETH there for 3 months to 6 months or even longer. As such, if you need this capital, you can't really access it unless you want to forfeit the interest rate. Again, much like a standard savings account. And the highest interest rates are really paid if you hold in something like USDC or UST, which is just a cryptocurrency that is pegged to the dollar. They have the same for the pound and the euro. Now, obviously, that base currency is not going to increase in value, but at least you've got the protection of it not crashing. Now, I would never do this. I trust BTC and ETH much more than I trust the value of fiat currencies being eroded over time. But if you want to go down that route, it's, I guess, quote unquote, less risk, and the interest rate is extremely high. I think UST, which is the tether version of USD, on something like Midas Investments, is paying 20%, which is crazy. Now, if you're getting a 10 to 15% yield on average, you really don't need much to quit your job. You don't need that much invested. Many people who build up a FIRE number, they have to go for kind of the million number, but in this you kind of only need a few 100,000, and it's permissionless. There's no one involved. You can go do it yourself, and you start getting paid from day one. Now, here are the best providers I found. Just so I'm unbiased, I haven't put any links in the description. You have to Google them yourself. This is just my initial research. I'm currently playing around with Midas Investments with a few $1,000s. I'm currently getting a net 15% return. I think it's 18% on ETH and 13% on BTC. So I've kind of got a split between the two. They are paying daily. I've done withdrawals. I've made sure that money can go in and out, and it all works as you would expect. They do charge around $6 for a withdrawal, but obviously, as that number goes up, the percentage that you're paying there as a transaction fee is very low. So bear that in mind. They, on balance, provide the highest yield with no lockup period. So there is no kind of catches to using their service. They are also becoming more regulated in doing KYC checks, which is a great sign. So go check those guys out. The other two that look really good is AQRU and Celsius. Again, go Google those. They pay a much lower interest rate, but again, if you're going to split between these providers, you're not going to get the highest rate. But I think that's better to have that balance of safety than just getting a crazy high interest rate and losing all your money with one of these providers. The key thing here is staking in BTC and ETH. This protects you, not only because the network is stable and safe, but it's likely to appreciate over time at a significant amount, in my opinion. So the best investments are, in my opinion, the ones you never sell. Maybe not in my opinion, maybe it's a fact, but and I think this is probably the safest to go. So, I mean, if you hold in these currencies and you're getting paid in these currencies and they appreciate over time, you can only do well. Now, anyway, I know this has been a bit of a different video, but I think it's important to know this. It's very possible that when I get to say 5 million in Tesla, this is kind of a number me and my best friend have been talking about. He's got a similar stake to me. When we get to 5 million, we'll take, anything between 5 to 20% of the portfolio out and put it into a bunch of these providers or, alternatives, put it into other indexes. I'm still not sure what I'm going to do. I may just keep it all in Tesla for a very long time, but it is tempting, this approach, because it provides you a high cash flow and you don't need to touch or take out margin or sell any assets for a capital gain, for the rest of your life. And obviously gives you some kind of diversification as well. Now, I can still do the approach of living off margin, but there is something very settling, as me and my friend have discussed, about knowing 10 grand is hitting your account every month without fail. And you don't need to worry about the fluctuations of a stock price in the future and how much you can take out, for example. It's very possible, I get to the million number, but then 3 months later, I'm down to 600,000. Yeah, I can still take the money out and it's still going to be fine. But psychologically, if I know that 10 grand is coming in every month without fail and it's permissionless and there's no one involved and, it's all electronic, there's something very powerful about that. So this is one of the many issues people hit when they hit FIRE is cash flow. And I think it's more of a mental thing, but I think you get the point. There is a difference there. So either way, I stay open-minded. If you found this useful, please comment below what you've learned from this. And if you have any crypto savings accounts already set up, if you do, what are they? What yields are you getting? What are the interest rates? And I'll talk to you next time.